It's Market Michael here, May 11th. I want to get into things, but first I want to give you the agenda for today. I want to talk about markets, then economic news, or economic data, then what is going on politically, geopolitically, in the real situation. So, let's get into things. Right now we're looking at futures. Let's go up. Let's go ahead. Okay. First, let's make myself small so everyone can see. Great. Thank you. Whoops. Great. Thank you. Look here, everybody. We're range bound. We're not leaving these ranges. We're staying here. So let's pull up something where let's pull up dailies. And these are the futures. What did I say, guys? Listen. When it comes to 6:30, we're going to get some market activity. Most likely, this shit's going to drop. By the time this these candle finishes, they're going to be dojis for the futures. That's going to start to make... Well, this is definitely a doji, and it might even turn red. Here we have like a... what looks to be an inverted hammer. Looks to be like this guy, but a bigger candle, less wick. And here we have the same thing, but except bigger than the S&P, more bullish. But the comp has the most to lose. Again, what we see Friday 6 o'clock lunchtime, we're going down, had a little rally towards the end of the day, and we're flat. You know, we're gonna break this and go lower. Check that out. Look at that 10-minute. Let's look at an hour chart. Hour chart looks like it's gonna continue to keep going down. Looks like we're failing this break out rather. Again, guys, I believe this is the top here. This coming down part is crucial in establishing this bullish trend. I suggest we're in a pattern. Let's check out 100. Well, here we are in that 180-day hour chart. Okay, great. No, we're not. Let's check out a daily. Okay, let's look at a daily. And we're not on the fucking where I drew the chart. Great. Great. This is what we're looking at. We're in this channel, and look, we didn't even break it. We got this doji. That's fair. Look at the CCI coming down. I think the juice is out. I think we're done. You know, markets are range bound. Markets, I expect us to go down. It depends on where we get that support. And we're going to have to move on. Right now, let's check other areas of the market. Let's check that 10-year. Let's check the dollar. Let's check the 10-year, 2-year rate. Okay, look at that. We had a big gap down, 0.43. We are going to hit that point fucking... We're going to go below 0.4 next week. I'm telling you guys. I'm fucking telling you. And none of you listen. You know, the dollar trade... We got this parabolic star ball on top. That's negative. We're breaking this fucking support line. Okay, we could reverse. I don't think it's likely. Let's look at a weekly. If you look at the weekly, we're topped off for this week. I don't think there's much hope. I think we're starting a new trend down. I could be wrong, but that's what it looks like to me. You can't deny that MACD is still strong. The CCI is coming down. We're flattening off. You could tell that with that candle. It is... If we're not at the top, we're definitely pulling back. Let's just check out a little bit less time. Again, it looks like we're just dead cat bouncing, continuing a failing line. Now, check this out. Very interesting. Even with negative MACD pressure, there's still buying action, and this 10-year yield is staying at this 2.9% level. There's not much. I think we're going to shoot up to that 3.5% very quickly. As soon as we get this, we're supposed to be in a downtrend, and we're not downtrending at all. We're staying right where we were at the highs. You know, when we were teetering at that 2.7% here, guys, 2.7, when we broke this, I was amazed we couldn't break out. And then look here, we barely went down. We went down to 27.3. Boom, that was it. Again, we're barely going to go down. I'd be surprised if we go into the 28s. I expect this to continue to be flat, and eventually we will get that breakout into the 3.5s. Now let's go ahead and check out gold, silver, and Bitcoin. Now, I told you guys I believed silver, to want to go through, and it looks like that this candle is showing us that we won't. We're already spiked out on that CCI. Maybe we come down a bit to the 16.5 level and then recoup and pass that and make higher highs. Take this pennant, fucking destroy it and go into the high 17s, make some new highs, come back down. Again, we are like range bound for the gold and silver markets. Now with this gold market, we didn't get that breakout. We had a big sell-off at the end of the day. I still think that we need to hold this support about 13.15. If we manage to break that and break down, I think it's bearish. As of now, this is the beginning of a bullish trend. We got support at the absolute minimum of this trend line, and what I see is us taking off. What I see is us taking off here. Check this out. Look, we're already down low. We're already down low on that CCI, MACD, RSI, tricks. We're on that positive section, so if we turn around approximately at 318-ish, then it is set to keep going higher. And check this out. Look, we're in this trend, right? But we're at this upper trend line, this move higher. We failed that. So this 1340 is going to be a critical point where we might actually fail it. And if that's the case, let's see what fib that is. That's critical 61. So if we end up filling that critical 61, we're probably going to continue to get those 1300 levels. But until anything happens geopolitically, I don't think that gold and silver will get that breakout. Those markets are very artificially suppressed. Same thing with the 10-year. The 10-year bond is heavily suppressed. It's heavily bought by the Fed. Just like how the working group props up those FANG stocks, props up those financials, props them up, guys. Just look at the last thing I want to look. Oh, let's look at Bitcoin. Bitcoin's taking a dive here. At some point we're gonna have to gain support. Looks like we broke that 8,500 that I thought we would get support at. I mean, we could go back down, 75, 7,500. We are getting lower highs. So we have to see actually where Bitcoin goes, because we might get lower lows. And if that's the case, it's pretty negative. Overall, guys, I didn't really see too much. Let's take one last look at the stocks for the weekend. Again, as soon as trading resumes, I think we're going to go down more, and I think next week is going to start a negative week, and that's going to result in gaining support at some regions. Let's just look at a weekly chart here, because let's see the weekly action. Again, we're very spiked out. We're very spiked out, guys. We had 2 bumps up here. 1 bump, 2 bump. Is that it? Can we not break out further? I don't think so. I think we're going to continue to break down rather than break out. We're going to get the support, hopefully, for those bulls. Hopefully it gets support at higher highs, at higher lows rather. And if you're a bear, hopefully it gets support at lower lows. That way it's an indication that this trend is going to reverse. You see here, again, look here. We had higher highs. So if you just look at this, it's a bullish trend, right? But then wait, what happened here? And then what happened here? So if you just look at this, that's higher highs, that's a bullish sign. But nope, we failed it. Come back down. Failed it. Established higher highs, getting some support. So this 38% is going to be critical support for that, for the S&P futures. Again, 2,672. Let's go ahead and look at the actual indices rather, so we can get more of a clear understanding of what we're looking for in the markets. Again, guys, so it actually is 26,000, sorry, 2,629 for S&P. That's where, if we end up getting support there, then that's still bullish. But if, let's say, if we get support at 23, at 2,591, that's actually very bearish, and at that point we should make lower highs. But we're likely to get support at this 2,675 moving average, then at that 2,629. For the comp, again, we should get support to 7,245 or 7,200, and again at in the mix of 7,100 and 7,000. Again, if we get support at 7,000, I mean that's still higher lows. We'd have to break 7,000 in order to get a real pierce of trend change. For Dow Jones, again, Dow Jones can't fall too much, so what we're basically seeing, are these both 23? 23 and 78, okay. So 24,627 is going to be support, but some support lower is going to be 24,339. And again, lower support at roughly 24,150. But again, if we make lower lows at 23,378-ish, then that's going to be a serious indication that, you know, markets don't like this. And again, we haven't hit overbought on the daily for any of these. We're spiked out on the CCI. We've gone too much. You know, we did fight it off. You know, so that's a sign that of that markets actually wanted to be there. So with all this being said, I gave you guys a pretty good understanding of what's going on with the markets. Now, let's just talk about what's going on geopolitically. So we have this Iran ordeal. What's going on with that? Trump pulled out of the Iran deal. Now, if the European members leave, that means they'll no longer be doing business there as well. We're going to throw sanctions on Iran, and that's going to make it difficult for U.S. companies to, it's going to make it impossible for U.S. companies to drill there. So what's going to happen is Iran is going to have to team up with Russia and China in order to get those oil fields pumping again. And that's just going to escalate things even more. See, we have Israel firing rockets at Iran, and Iran firing rockets at Israel over in Syria. And, you know, that's not good. It's causing oil prices to skyrocket, as well as just causing uncertainty, and the market is not reacting to it. Now, you see here, you want to get the blame that, all right, first of all, when the markets are doing bad, the fake news tries to blame it on something other than the economy. They try and blame it on the trade. They try and blame it on this. They try and blame it on that. But no, what's really happening is the market just doesn't want it. So now when it finally wants it, they just jump and holler, and you would think it's the end. You would think it's the beginning of a new rally. I don't think we're going to be able to get those highs that we did, and if we do get those highs, I don't really see a breakout. And like, for instance, remember how I continuously show you guys the 20-year monthly chart? Look at this '01 bubble. This is the '08 bubble. And now look where we are. We would have to go up to this point, double. That's not really likely. There is some points here, but again, it's not likely. We've hit this 38%. We've hit this 100%. Usually when stocks go up like this to that extra leg, they come back down. Normally, they don't take that extra leg and go to that, oh my God, NASDAQ 11,000. Can you imagine that? Can you see that? NASDAQ 11,000? That's unreasonable. And if you think that's going to happen in the next year before the next financial crisis, then I don't know what to say to you. Where's all this money coming from to pump into the markets? I mean, we're at the height of euphorism. It's absolutely insane. So we're pretty much, I'm going to say we're range bound, and we're not going to make drastic moves in either direction. Check out this 100%, check out this 61%. I say we're going to stay in here until a black swan event comes in which they're going to blame the market on. Why isn't there much volatility anymore? Well, the Fed's got the shorts in control for the volatility. That's why. The Fed shorts volatility. What's going on with the economy? Well, the economy is slowing. It's still expanding, but very slowly, and it's starting to get to a point where businesses can no longer operate at the capacity that they used to. They have to allocate resources in order to save money. For instance, Ford closing up most of their car lineup and only have the pickups and Mustang because business is that bad. Subway closing the stores. Look at all the companies closing and going out of business. Look at all the buyouts. Look at what's going on in the world. Apple isn't the face of our economy. The economy is run off the backs of people like you and me, the slaves of the country. And there's a lot of shit going on that's making it more difficult for people to get these jobs. The labor market's tight, yes. But let's get to the root of that. Why is it tight? We got part-time workers, we got discouraged workers, we got people, who just can't get off government welfare. Simple as that. The government puts out their numbers in a way where it makes them look better. And it's not necessarily right. I think this is going to take a while for markets, for the economy to go bad. I think it's going to be a couple months. Yeah, 4%. Blue chip consensus. Bottom of the barrel, 2.5%. Get out of here. So, guys, watch my video, What's in Focus for next week, because all of that stuff is really, I kind of briefly mentioned it on this video, but it's not, I didn't go ahead in detail like I did in that one. So, we're going to have to watch for those slowdowns. I think, hold on, let's take a look at this. So I believe July or August is that next rate hike or next business cycle, not cycle, quarter, next business quarter. I believe there's 4 months. No, let me check this out. I want to make sure I know what I'm talking about. Okay, so yeah, April, May, and June. So June is at Q2. So we're in Q2 now. All right. So maybe Q3, Q4, we get that recession. So that's 1, 2, 3, 4, 5, 6, 7. 7 months, 3 rate hikes. That should be enough to kill the markets. If the markets, December, January, guys. So I don't think the markets are going to crash. Is it possible that the markets attempt to go higher? Yes, it is. What's going to have to drive them is growth. And what we're going to have to look for is the slowdowns, which are going to occur in the mid-summer and continue into the winter, which is going to absolutely destroy the markets. At least that's what I'm seeing. So we're going to have to end it there. Thank you very much for watching. Please like and subscribe, and I will see you later.